Bitcoin seems to be in love with Adam and Eve patterns suddenly. Will this trend continue? Hello Adrian, and welcome back to another episode of the Dang Oracle. It's 7:30 p.m. UTC plus 8, and welcome everybody around the world who is watching this and joining me for this show once again for tonight. Let's wait for some of the hardcore crew to be joining in. Hi Lex, hi Monkol. Lex and Monkol have been here I think every day since the past I don't know how many days. How many days have we been doing this? I don't know. Hi Steven, welcome. Hi Alvin. How's everybody doing tonight? Hi Justus. Hi William. Hi Darren. Of course Darren is here. You know somebody that I have been missing is Henry. I think Henry has left us. He hasn't shown up for a few days now. What has Henry been doing? Hi Nikolai. Yes, I had dinner already. That's one of the reasons why I do it. Hi Ngi. Why I do it at 7:30? It's because it's after my dinner time, and also it's just in between. Hi Gita, it's just in between the 12-hour candle close. So the 12-hour candle close is of course something that's very, very important, and that's at 8 p.m. for me. So when I start out at 7:30, it makes it perfect, right? After dinner, 12-hour candle close, just before and I stop the show before the New York Stock Exchange opens at 9:30 p.m. for me, so I can prepare my own trades and stuff like that. So that's the reason why I'm doing it at 7:30. So it's more, it has its reasons and purposes. It makes it easy for me to separate my own personal trading life, my work, and this what I'm doing for online as well. Okay, so let's go and check some numbers on the COVID situation and let's see if things have started to slow down a little bit more or not. Let's see. So we are at 1.7 million. For the US, over 400,000 already now for Brazil. Not looking good for Brazil, by the way. Numbers have been going up very, 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 very quickly. Russia, of course, and I told you about it yesterday. Brazil, the president of Brazil is not a believer of a lockdown or anything like that. He said, just keep on going. We're not going to do anything. And we'll figure it out after the strategy of basically like in Sweden, where they're just saying like, well, we'll get over it. It's just a flu, guys. It's just a flu. Let's see. Let's see if it's just a flu or not. So anyways, we are at 5.7 million total confirms right now, but it seems to be flattening. That's something very positive. It seems to be flattening as well for the US, also starting to slow down. Brazil is still not good, not looking good. Russia as well, still not looking good. UK still not looking good. Spain is starting to slow down, and Italy as well. But overall, it's not that great, right? It's not that great. Anyways, so let's go into the topic of today. Well, today everybody is talking about it. Well, I don't know if you're aware of it, but we had the infamous call from Goldman Sachs yesterday, where they did a presentation on basically what they are believing what will happen, and I got the presentation with me because I'm part of the Goldman Sachs fan club. So I'm just kidding, but so I have the presentation right here. Yes, sir. This is the Consumer and Investment Management from the Consumer and Investment Management Division. What is their outlook and implication of current policies for inflation, gold, and Bitcoin. So that's super new, right? Wow. Goldman Sachs, one of the biggest banks in the world, well, in the US, is going to talk about Bitcoin. Is it going to be positive? Is it going to be negative? We shall see, and we shall find out, right? Anyways, this is the views are the views of the investment strategy group, the ISG, from that's the consumer investment management group of Goldman Sachs, of course, right? So, what is today's call about? Update about COVID, U.S. economic implications, and current policies for inflations for gold, inflation, gold, and Bitcoin. Okay, this is the timeline for the COVID virus. As you can see right now, the numbers are not as updated as I am going through on a daily basis, of course, but it's pretty recent, of course. So, as you can see right now, they're using the 7-day moving average and the US infections, and it's actually starting to slow down. And we can see that as well on the charts that we're looking. Although it keeps going up on a daily basis, it's actually going down slowly, right? As you can see here, in terms of the moving average, it's continue to be going down. Total fatalities is over 100,000 now already, actually. But yeah, so they have a fatality rate of 5.9%. Hi, Herds. This is what they're going to do. Reopening of the U.S. states, as you can see here. We have some states that already have reopening, and some states that have regional reopening. As you can see, everything is starting to reopen in the whole country. Here are actually the where it has been lifted, and that there are new cases, right? As you can see here, what is in red and pink is actually not good. What is in blue is steady, and what is in green is actually decreasing. So overall, if you look at the wider picture, we can see that pretty much it's stable. Like some states really have it really bad, even after opening, and some states have it oh, Henry, hi Henry. Hi Henry. So yeah, still very diversified right now. Anyways, here's the high frequency US growth measures. Bottomed in April. So mobility data in US has improved meaningfully since the low in April. As you can see here, mobility has been growing. I mean, kind of normal when they're opening up the market, right? More important is the total credit card spending. So credit card spending from the Bank of America has been is back to almost the same levels as before the crash. So that's quite important. That means that people are actually, spending on something again. It's still lower than before, but that's a good thing for the economy and overall in general, right? You need to have spending. So the U.S. mortgage, as you can see as well, are approaching the pre-pandemic levels as well. So that's also very important that people are getting loans once again, and things are starting to become back, going back to normal. It's still very low, on a very low end, even though the amount of interest is very cheap to get loans right now. It's still low, but actually, that's a very positive sign once again that it's going up. So this is their outlook for the U.S. growth. As you can see here, the third quarter they are stealing. The second quarter is very negative, but they expect the third quarter to be actually, pretty good, and so on in the next quarter. So they are actually forecasting a growth of minus 6.3% in 2020, but a plus 6.1% in 2021, which means they are actually predicting a V-shaped correction on the market, right? So yeah, that's what they are predicting. These are the different views on the U.S. growth. Because there are people who are of course going to say, like, that those numbers are not correct. The reasons why is stated below. No visible regarding therapies yet, then a promising preliminary data. Limited visibility regarding vaccines. Multiple waves according to Dr. Richard, and Harvard is suggesting 20 to 60% will get COVID-19. So that's a pretty high number. You know, Harvard is saying that 20 to 60% of everybody is going to get COVID at one point. There's no lockdown that can save you from that, he says. So prepare yourself for some COVID. Anyways, let's go on. Next is the rapid rise in unemployment. As you can see, yeah, it has been insane, right? Increase in unemployment has been really insane. I think 30 million or something like that. Yeah, 30 million, as you can see. And yeah, it's still ongoing. But this is what they are expecting. So as you can see, through April, unemployment rate rose to post-war high of 14.7% in April. Ooh, that's and if they go for an adjusted unemployment rate, it's likely meaningfully higher. Wow. So yeah, because there are other reasons as unemployed and temporary layoff, and assuming that unemployment, yeah. So yeah, if they compare it in an adjusted rate, it's actually even higher than what it was in if you compare it post-war. And then so they are expecting it to peak at 25%. And then the broader U6 unemployment rate to peak at 35%. So they are expecting that unemployment is actually going to go even higher until 25%. That's definitely not good. And as you can see here, this is temporary job losers, permanent job losers, and other. And yeah, it's the numbers have been really crazy. And that's why, yeah, people are still believing in a V-shaped correction. They are, but let's see. Let's see. Only the market and only the time will tell. So they're checking: is this going to be a new economic depression because unemployment has been going up, GDP has been going down, and S&P crashed tremendously. So this is what is currently going on. Of course, the money printing. The money printing is has been insane. As you can see, we have phase 1, phase 2, phase 3, phase 4, and they're actually going to most likely go for a phase 5 if things don't work out as well. And as you can see right now, the amount of money that has been pumping in is insane, right? So they are saying at the end of June, Goldman Sachs Investment Research expects another 1.5 trillion on top of everything else. 1.5 trillion over the course of 2020 and 2022, about 550 billion, and the rest over the following 2 years. So it's spread over the next 2 years basically. But yeah, a lot. Government deficit and debt, as you can see, projection. You want to see the projection? That's what they are projecting. Yeah, it's going to be at an all-time high. The government deficit and percent in terms of percentage of GDP is going to be, yeah. It will take the debt above 100% of the GDP in the near future, meaning doesn't matter what they are going to be, the whole country is going to be producing, it will all be into debt. I hope you understand what that means. It means that they won't be able to be repaying the debt. There has to be some debt relief, or removal of debt, where they just okay, well, you don't have to pay back this money anymore, or else it will never be repaid, because the debt will be over 100% of the GDP. That's that's not good. Anyways, so this is the fiscal outlook. As you can see here, this is what they are projecting. This is historical. This is what they are projecting, and they are thinking that so the debt will go until 150% of the GDP. 150% of the GDP by 2030. Woo! Oh shit. Oh shit. That's not good. Yeah. Yeah. But everything is apparently okay. Even if the debt is going to go over 150% of the GDP, apparently it's still okay. But anyways, so we can see that the FED has been very aggressive in response to the pandemic. It has cut the funds to zero, that we know already, the rate to zero. It has purchased assets, supply of liquidity, and so on and so on. We all know about that already. That's the only reason. That's the only reason that people are getting by and still putting their money into the markets, really. So this is not that important. This is more important. So they are saying that inflation has actually been muted. That's really important. So headline inflation fell sharply to 0.3%. In April. The decline was the result of lower energy prices, of course, oil death, right? Oil died, and weak demand, of course, lockdown. Core inflation also decelerated, dropping to 1.4% or minus 0.4% MOM, the largest drop on record. Well, we've talked about it. Usually before inflation, we usually get a period of deflation, and that's a little bit what they are saying. The slowdown in inflation confirms that the deflationary nature of the pandemic shock. Nonetheless, the inflation data have to be interpreted with care, as many goods and services are not available due to the lockdown, which some researchers believe may cause a downward bias in the price data. So market-based inflation expectations have remained subdued at 1.5% as of May 2022, while survey-based expectations have been stable at 2.2% through March. So what they are expecting in the forecast of in terms of inflation is, as you can see on this chart here, pretty much stable, and very little, or actually a little bit lower inflation for the upcoming few months from now. And I think that's quite interesting, or quite important to see. So they strongly believe that there will be no inflation for the upcoming short-term period, even though they have been printing so much money. And like I said, I don't think the effect will be felt this year or anything like that. But most likely next year, something like that, or maybe a bit later, but let's see. Anyways, the FED balance sheet has expanded as a record pace. Yeah, that's pretty clear. They have been buying all the bullshit stocks and all the bullshit assets in the world that have been dying, all the airplane stocks, all the everything that has some sort of value. The FED has been buying it up. The question is, are these companies going to be able to become profitable, or else they will just become a burden in the future for the FED, right? So if they cannot earn money, they cannot repay their debts or their loans, like I said, we have to understand they are projecting that the debt is going to be higher than the GDP, so they will the government will have to waive away some debt somewhere, from some companies. So I really think that the situation is going to be unsustainable. Okay, so we've talked about the negative rates. So some countries, some people are saying, well, you should go for negative rates instead of positive rates, right? Or zero. Right now it's zero, right? But yeah, some studies have suggested that negative rates may actually increase the savings rate, as people compensate for low rate of return by increasing their aggregate savings. So yeah, negative rates, some people are against it, some people are for it. For me personally, if they're going to go for negative rates, I think shit is going to be going worse quicker than that. So I really hope they don't go for negative rates, but who knows? When people are desperate, they're gonna go for it, of course. Anyways, the US dollar strength, as you can see right now, we've spoken about that many times also already, with the Gresham's law. Money that is going to be used or is considered very useful is always going to be the first thing that people are going to exchange into or move back into to be liquid, right? So if you can buy a lot of goods and stuffs with the US dollar, that's the US dollar is going to be the first thing that is going to be very liquid. And as you can see here, the trade weight index is up 8.1%, and the Dixie or the DXY is up 3.6% year to date. Kind of normal, like I said, although we get so much money printing, and that should be devaluating the money. But since that we are in a pandemic, people are actually holding and exchanging their money, the other money that is even worse, into the dollar or into the euro or into the yuan, like any big and strong currency that they can use to. So yeah, this is just basically showing that the dollar is pretty strong, although they are printing trillions and trillions of dollars. Next, and there's gonna start the analysis about gold, and I think that's quite interesting as well. So they are saying that the S&P has been trumping gold, but they are only comparing it from April 5 to May 26. So, you have to be a little bit careful there. So they are saying the S&P is obviously, well, the S&P made an insane move up, that big V-shape recovery, similar to like Bitcoin, by the way. Right, we went from 3,600 or something like that towards where we're at right now. I mean, we even peaked at 10,000, right? So that's a 300% move. So this comparison is a little bit stupid, I feel, because it's such a short term, and it's kind of like, just peak, like taking out the parts. Why don't you put Bitcoin next to it and it's 300%? Then what are you gonna say? Is Bitcoin the best investment in comparison with S&P, and it's better than gold? Yes or no? I think that's a little bit stupid and a little bit retarded, but that's what they're doing. So I'm just saying, put it a little bit into context. So here they're comparing what the long-term inflation adjusted averages are in comparison with before. And they are comparing that, although during inflation phase, gold has equities have consistently outperformed inflation, while gold has not. So they're basically saying, on the long term, all the time, equities have always been outperforming gold, and they're right if you are looking at this chart right now. But gold has outperformed in rare and elevated inflation regimes, right? So when things goes really, really bad, then gold is shining. And well, that's what I've strongly. That's the reason why I'm strongly believing that gold is going to be shining, outshining, because I do believe, like I said, not now, but next year, end of next year, mid of next year, I do believe that shit is going to hit the fan. And yeah, like they're saying it does outperform in rare elevated inflation regimes, and I think that's something that we're gonna have in a couple of years. So yeah. There's also an unstable correlation between gold and inflation, not that important. They're saying gold does not offer reliable downside protection. So when in periods of significant equity market drawdowns, high quality bonds are more reliable source of diversification. In some cases, the bear market that was partly triggered by the Arab oil embargo and the triple crude oil, gold provided tremendous downside protection. So once again, basically it's just saying they're just promoting equities, obviously, because they're making more profit on that. But in rare occasions, in big rare occasions, gold does offer a more reliable downside protection. Then, they are talking about Bitcoins. Yes, a bank that's going to be talking about Bitcoin. Amazing. What are they going to say? Are they going to be positive? Are they going to be negative? What do you think? So they are first saying that they need to be meeting these three criteria to be considered an asset class. First, they are to be used a medium of exchange. They have to be used as a unit of account, and they are a store of value. And they are saying cryptocurrencies are not an asset class. And they're saying why? Because they do not generate cash flow like bonds. They do not generate earnings through exposure to global economic growth. They do not provide consistent diversification benefits given to their unstable correlations. They do not dampen volatility given historical volatility of 76%, which I applaud, because I make money from volatility. I don't want Bitcoin to be fucking going sideways. Anyways, do not show evidence of hedging inflation. So it's not a hedge. And they're right. It has been correlated to the stock market. Although, like I said, a lot of Bitcoin lovers are saying, it's a hedge. It's not a hedge. Right now, it's not a hedge, okay? It's not a hedge. So they're right on that. And then they believe that security whose appreciation is primarily dependent on whether someone else is willing to pay a higher price for it is not suitable investment for our clients. We also believe that while hedge funds may find trading cryptocurrency appealing because of their high volatility, that allure does not constitute a viable investment rationale. Okay, so cryptocurrency have received enormous attention, and they're talking about it. As you can see, the huge pump and dump on Bitcoin. They're talking about the market cap, and then they're saying cryptocurrency can be a conduit for illicit activity, Ponzi schemes, ransomware, money laundering, darknet, marknets, all the bullshit. But to be honest, you can change this word cryptocurrency, you can change that into US dollar, can be a conduit for illicit activity, and everything would be correct as well. So once again, it's pretty much bullshit that they're saying. Yeah. A lot of Ponzi schemes, ransomware, money, a lot of scams. Yeah, we know that already. But like I said, people are going to be scamming you for any type of money. Doesn't have to be crypto. It can also be dollars, euros, or whatever currency. Scammers are out there in the world, right? So doesn't need to be cryptocurrency. So I don't even understand why they're putting it in it, but they want to make things, show things very negatively, right? So the cryptocurrency infrastructure is still young and susceptible to hacking or inadvertent loss. Yes, we know about that as well. All the fucking exchanges that got hacked, it has been insane, right? So many hacks has been happened, but banks have been hacked before as well. Even fucking Goldman Sachs has been hacked before as well. Their data, their whole user database got leaked for from I don't know, 2 million users. The data was leaked in the US or something like that. It happens. Shit happens. IT is something, hackers are crazy people, and there are some crazy hackers around the world. But yeah, like I said, exchanges can be hacked, but banks can be hacked as well. Facebook even got, database got hacked, or that's what they claim. Maybe they sold the data. Who knows? Anyways, I'm just saying, once again, it's not, for me, it's not really a argument that you can be using as a real argument. Let's put it like that. Cryptocurrency has been dwarfed by historical manias, so they're once again comparing the Bitcoin bubble with the other bubbles, the tulips bubble, the same bullshit that they've always saying, but that it's a bubble. But then you can also say that Amazon was a bubble or Apple was a bubble. If you look at that chart, it was a bubble chart as well. And all the IT companies. But now the IT companies are the number one or the leading ones, and the one that are saving NASDAQ, and they're saving the S&P from crashing all the way to the bottom. And so yeah, you can talk about that as well. Anyways, so what is their key takeaways? The key takeaway is the economy has bottomed. This is not a depression. So they are strongly saying we good, guys. Everything is going to be going up. We are recovering. V-shaped correction. Significant uncertainty remains with its growth. So they do believe that we have bottomed, but they don't know how fast we are going to be fully recovering. So they're saying it could take a while before we get back to the normal situation. So fiscal and monetary policies measures were designed to offset the demand shock and liquidity shock, and will not be inflationary. So they believe that even with all the money printing and this and that, liquidity has been provided, and there will be not much inflation or anything like that, like what the dooms people are thinking. Stagflation is highly unlikely. The US dollar will not be debased because the value of the dollar is going up, blah blah blah, with the Dixie and so on. We do not recommend gold on a strategic and tactical basis for clients for investment portfolios, so they are advising not to invest in gold. And we do not recommend Bitcoin on strategic and or tactical basis for clients' investment portfolios, even though its volatility might lend itself to momentum-oriented traders. So what are they saying? Don't invest in gold, don't invest in Bitcoin. That's basically what they are saying. The banks. The bank. So what do we get from this amazing presentation and opinion? Yeah. So what I look at this is, you know, a lot of, I think a lot of the things that they are mentioning is bullshit, like I said. But it's kind of normal. You have to understand, banks want to make money. It's just what they are. They want to take your money so they can loan it out with interest. You know, that's how they make money, right? So if people would be starting to put all their money into cryptocurrency or something like that, banks are not going to make money, any money. All the money will be going into the cryptocurrency market cap, right? So it's not, of course, they have to be saying that they have to be against cryptocurrency. Until, of course, they have their own cryptocurrency or their own coin or their own token, or they have sufficiently amassed enough Bitcoin that the price of Bitcoin is high enough, then they want the retail to be coming in, and then they dump it on the retail's faces. That's what they're planning to do. The more interesting for me part was the gold part, that they are against putting it in gold as well, where but that one I kind of start to understand as well, because what makes most money for them is, of course, when people are going to be investing in S&P, in stocks for them, in equities and so on. So that's where they make more money from. So yeah, that's you take what this investment strategy group presentation is all about. You can you can take your own opinion from it. I just went over and through with it, and that's my opinion, how I look at that presentation. So what is next? Well, we are moving back into good old Bitcoin, because Goldman Sachs hates Bitcoin. That's why we do it. The rebel. Anyways, so let's go back to yesterday. Well, nothing that much happened. Let's go to the 4 hour. It will be easier. Nothing that much happened yesterday. As we said, once we start breaking above this green box here and close some 4 hour candles, most likely we'll be heading towards the higher green box around the 9.5K. And I also said that most likely for today, it's going to be moving pretty much on a sideway because today is not the 29 yet, right? It's not in the 29 yet. They have to be stringing everybody along until they dump it on your faces on when the CME expiration contracts ends. So of course we are still looking up towards this 9.5K area, something like that, and that's where the more interesting things are going to be happening. We actually touched the 9.3K area, which is something that is very interesting as well, because here, as you can see here, we had all the tops here with around the 9.3, and of course we get another top here, which is kind of like a triple top, something like that. But like I said, as long as we are holding above the green line or the EMA 55, this looks very, very, very bullish, and most likely going to be going up once again, right? So this is going to be very, very interesting tomorrow, leading up towards the expiration date of the CME, right? That's going to be very, very interesting. But yeah, I like I said, I kind of expected this already, that we are going to be, trending towards that area around the 9.5K, even wick a little bit up, like I said here, like 9.6 maybe, or something like that. But most likely we're gonna make a lower high. That's basically what I do think is going to be happening. So I think that we were gonna go back to all the way to 9.8k? No, but like this here, this red line here around 9 point, what is it? 9678. That's definitely possible. But starting from 9.5 to 9.6, I mean that green box or something like that. Okay, so where are we at? What did I wanted to tell you guys today? One of the reasons why I still think that we are most likely going to be going more up is, of course, right now everything is still bullish. Hi John, you have your long at 7,400. Yeah, I would. I think that's a good spot to be longing, but yeah, you might have to wait a while before you get there. So in between, I'll make some more trades in between before you can long that spot. But maybe one day, I'll tell you that I'll be longing around that 7.4k. I still think that's gonna take a while, John. So yeah, maybe next month. Maybe next month. Anyways, so for now, I still think that RSI still has some room to be going up, and it's building a momentum towards the upside. So I do think that we still have some space to be going up. But more important, we are forming some sort of a Adam and Eve pattern. I wanted to talk a little bit more about that pattern for today. And this is the Adam and Eve pattern. As you can see, we have a sort of like a V-shape, a quick V-shape movement, and then a rounded cup circle movement towards the upside. And we have a resistance line, and this is T1 and this is H1, and we can nicely see that in our chart as well. So if you look at our chart, we have a downwards trend movement, and then we have here our V-shape movement, and then we have a rounded cup. And then most likely, where does it end? Most likely back here, right? Where we started our first movement. So T1 would be here, and H1 would be here, and this green box is of course our resistance, right? Take a look of our picture one again. As you can see, this is our Adam V, breaking down the resistance. Well, this is support. Then breaking down the support, going back to the resistance line, making a U shape. Correction, and going back to T1. Okay, so going back to our example, as you can see here, this is our drop down, breaking down from the support line, going back towards the resistance line, making a U-shape correction, and moving back up towards our T1. So that is our Adam and Eve pattern, as you can see for today. And that's the reason, one of the reasons why I'm quite confident that we'll most likely be getting there as well. And also, like I said, I've talked to you guys about the CME expiration dates. People will want to have the highest price when they close their longs for this month. That's basically what they want. But also, people will want to have the highest price as a starting price to be shorting. So you know, it works both ways, right? So if it flips over, if it's very high, people will want to short it because they are hoping that next month is going to be a very low price, right? So once again, nearing this this green box, but it depends on how fast we get there, right? So it can be a little bit higher depending on how fast we get there. Like I said, it can be all the way this green box actually, because I want to see this this resistance line being held back, right? So let's see how fast it is. But yeah, somewhere around that area is when I'm going to be starting to enter a short position. Let's put it like that. So I'll start building my position here around like 9.5k all the way up to let's say 9.6 ish, something like that. 9.5 to 9.6, something like that. Yeah, just somewhere around here. That's where I'm gonna be starting my my shorting position. Yeah. Okay, and so that's our Adam and Eve pattern, but this is our bullish Adam and Eve pattern. But we can also have a bearish Adam and Eve, which is completely the opposite, right? Where we get a pump, break the, well, this is resistance first, resistance, go down to support line, then form a cup move, and then go back to our T1. And have we have an example of that before? Of course we have. It actually happened very just before of that. So as you can see here, we have our move up, and then we have our breakdown of our V, and then we have our U shape here. And then what happened? Price went back down to our T1, as you can see, right? So if this is our T1, and then our H1, and then this green box here is our support line, right? So it's a beautiful Adam and Eve, and then another Adam and Eve. It's a back-to-back Adam and Eve, guys. It's a back-to-back Adam and Eve. So if you wanted an example of an Adam and Eve pattern, well, you got one and you got another one. Amazing, isn't it? Amazing. A double Adam and Eve back-to-back. That's actually quite rare, but as you can see, it happens. But yeah, as you can see, the pattern worked out pretty well as well. See, both Adam and Eve patterns, beautiful. Up. Let's remove all of. Wait, what happened? Okay. What happened? Something happened. Something got removed. Oh shit. I did something wrong. Anyways, yeah, it's gone. It's gone. No. Why is it gone? Okay, it's back. I think it's back. Woo! It's back. But this line is not correct. How come this line is suddenly up? Okay. Okay. I won't touch it right now, or else I'll do something. I'll fuck something up again once again. Okay. So 9.5. Let's move it a little bit here around the 9.5K area. Here, this green box and that green box is there. It's 9.8 and then 10K. Okay, everything is okay right now, I think. Yeah, okay, everything is okay with my boxes. That's the most important thing. Yeah, so short term, I still expect us to go all the way back up, like I said, to our Adam and Eve pattern here. So somewhere here. Most likely by tomorrow, something like that. I don't think it. Well, maybe. I don't think it will happen today. I actually still think that we'll have a small pullback or something like that, and then something like this. But we'll see. Doesn't really matter. What matters is, like I said, I'm not really interested in a long right now. I'm more interested in a short. Why? Well, like I've explained to you before, what we're trying to do is find resistance spots for shorting, and what we find where we have support zones like here. That's where we are interested in longing, right? So we just stick with our basic trading principles. So this is, as you can see, a major resistance zone. So that's where we should be trying to put a short position, because the patterns are still showing us that most likely we'll be getting rejected because we keep making lower highs there. So where am I going to be putting a short? Well, this green box right here, around 9.5 to 9.6K area, something like that, would be my my shorting spot. Where would I be putting any stop losses or something like that? Where would I be closing my position or switching into a long position? Is, like I told you guys before, this is a beautiful doji candle, right? And the doji candle is my favorite candle. Welcome to my doji. That should be my tagline. Welcome to my doji, because a doji line is a candle that is indecision, but actually the indecision is a decision, because when it breaks on the top side, it means that there is strength in the market, and if it breaks on the downside, it means that there's weakness in the market. Oh, Henry, wow, it's been so long, Henry. It's been so long. But yeah, so that's where I would be switching it up into a long position. So if we would be breaking over this doji candle, I would most likely be thinking about switching it up into a long position as well, right? So just looking at the doji position, yeah, sort of, yeah, sort of. This V shape and then a curl. But if this would be a real Adam and Eve reversal, then then we'll be actually be going towards most likely towards the 10K area. So this can go all the way to 10K if this is an Adam and Eve pattern. So yeah, that's not what we want. So welcome to my doji. Anyways, so yeah, back to my doji. So yeah, we have our doji candle right here. That's where I would be switching into a long position if we would be breaking that doji candle. So my risk is quite defined on that area around here, right? So we can try, and most likely if we break that area, we'll most likely go all the way up to, like I said, 10.4K, 10.5K, so we can enjoy a little bit of our long over there. But yeah, most likely I do expect, I'll remove this falling wedge here. I do expect us to be going down. Hey Diddy, I just said it, where we can put a stop loss. Listen more carefully. I'm not gonna keep repeating. It's the doji candle. Follow the doji candle. Anyways, this is basically what I've posted actually on TradingView today. I'll show you. This is what I posted on TradingView today because this kind of makes sense. We basically broke out of our rising channel here, as you can see, and usually what happens is when we break down from a rising channel, we actually go back and retest that channel before we break down. So yeah, we break down. So that's what I'm expecting. Still a little pump towards like 9.550, 9.6K area ish, something like that, and then most likely we will get all the rejection back down towards what I'm thinking around the 8K area, right? 8K area is what I'm expecting that it's going to be pushed down. Why? Because we are forming some sort of a descending triangle, and we have tested this one 3 times already, and usually the 4th time we actually break the support line and then go here. But what it also can happen is that we get rejected and get another bounce here, and then we go down here on the fifth bout. That's also very possible as well. So we'll have to analyze what exactly happens, but I do believe that from here, if we get rejected from this spot here, the push down will be quite substantial, at least towards our 8.6K area once again. So if we get from 9.5K towards 9.5, 9.6K towards 8.6K, that's like a $1,000 move. If we get even lower towards the 8K, that's like a $1,500 move. So either way, that is for me the money move for this month, or maybe it's going to be happening next month, who knows. But that's going to be the big money move, and that's what I am looking forward to, right? What else did I wanted to say? Oh yeah, wanted to talk to you guys also about the COT. What is the COT here? That's the Commodity Futures Traders Commission. So what a lot of people don't know is actually the institutions or the professional traders, they have to send in reports on a weekly basis on what their positions are. Are they long? Are they short? Are they, what are they doing on all these types of trades that they are doing? So as you can see, on agriculture, petroleum, electricity, metals, blah 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 blah, but also on Bitcoin. And that's why I wanted to go on TradingView. You can just input COT and it will show up, and that's what I wanted to go over with you guys. So the blue line here, as you can see, that's what the retail investors, retail traders are doing. The black line is what the institutional traders are doing, and the gray line is what the professional traders are doing. Okay, so Right now we can see the red line and the green line here. That's basically the open interest, and from the four biggest positions. And right now it's more short than long, 65% short and 34% long. So overall it's more short than long. And as you can see here, and I think that's the most important thing, you can see here, since price started to go up, the blue line kept on going up, which means retail has been buying the Bitcoin, right? Has been buying this pump towards the Bitcoin. But if you can see what happens with the gray line is actually going down, which means the professional traders are actually selling the Bitcoin, right? They're selling or slowing down, closing down their positions. And that's basically what is the most important thing that I wanted to show you guys, because what you should be doing as a trader is actually the opposite of retail. It's just because retail basically always ends up with holding the hot potato. So let me give you the example here. So when price went down here, down all the way here, you can see the gray line is going up, and also the black line in a slow pace is going up as well, as you can see. Means professional traders and institutions have been buying up, right, at this level here. Let's say 3.8 to around this area here, 3.8 to like 7.5k COT, John. So that's where professional traders and that's where institutions have bought their Bitcoin. Where did most of the Bitcoin started to actually getting bought by retail, as you can see here, starting here, which is 7.3k all the way up to now. Basically they keep on buying right now, as you can see, because they are thinking halving is going to make me rich. So like it's just very simple. Just understand this. You want to be selling at the highest price and buying at the lowest price, right? But if you can get retail to get into the FOMO, get into the marketing, you'll be able to, only then you'll be able to buy the to be able to sell at the highest price. So when institutions and professional traders have bought at 3.8 to like, let's say 7k, and retail has from 7.5k to 10k basically, what do you think will happen? Well, obviously when institutions and professional traders are going to take their profits, they're going to dump it, and I think it's going to be happening pretty soon. They have been dumping it slowly already, as you can see here. See, you can see it's slowing down. So every time this dump here, that's from the professional traders, as you can see, and retail bought it back up. They said buy the dip, because halving is gonna make me rich. And then retail and institutions sold it off again, and as you can see, price dumped back then. And what did retail do? The retail is saying buy the dip. Let's buy the dip. We can't lose. This is going to break to $20,000. My YouTube channel said so. I'm bullish. I'm super bullish. And what do you think is going to be happening? Well, I think you can make the conclusion yourself. Whenever retail is buying a lot, that's actually when you should be actually pretty bearish, because most likely they are going to be the one holding the hot potato, because they are going to be selling. The institutions and professional traders are going to be selling because they have already bought at this price. If you already have bought at 3.8k until 7k, and you get retails to be buying at 9k and 10k, that's the dream, right? That's the dream. You'll be selling it at double the price and cashing in your profits. So what do you think is going to be happening? Well, I think retail is going to get fucked over once again. And that's how the world works, right? Retail is the one who are always going to get fucked. So you just want to be trading against the retailers. So if you see that retail is going up, if you see retail is buying a shitload of Bitcoin, that's actually when you should be thinking, oh shit. And this is what's going to happen, right? So the professional traders are going to be dumping. The price is going to go, let's say, go back to 8,000 or something like that. Then people, the retailers, are of course going to be in panic and fear. Oh shit, this is going to go all the way down to 3,000. I'm going to sell immediately now the Bitcoins that I bought at 10,000. And then they have lost their $3,000. And then that's when institutional professional traders, oh, the price went so low, I'm gonna buy again. And then the retailers are going, oh, not this time again, I'm not gonna believe in this shit again. And then price is gonna move back up, and then they'll be like, oh shit, I should have bought. And then it's gonna be too late again. And that's the cycle of greed and fear. Basically, that's the cycle of greed and fear. So that's has been going on since lifetime, right? So it's nothing new or anything like that. I'm just saying, when I see this, when I see retail at the peak, for me that's like, oh shit. And when I see this, when institutions and professional traders are starting to slowly offload their Bitcoin, that's when I kind of know, like, yep, it has most likely be topped, right? It has mostly topped. Doesn't mean that that retail cannot push it up a little bit more. Of course, like I said, it can still go up a little bit more. Do I think that it can go a lot higher? I don't think so anymore, though, because at one point these guys who have bought at this price, they will be shorting, or they will be pushing or selling the market and just taking profits. And who is going to be ending up with the hot potato? The retails are going to be crying and saying like, oh shit, this is a scam. I got scammed. I thought that Bitcoin was going to make me rich. Well, sorry, it didn't happen. Anyways, so that's once again just another one of my thoughts and opinions. I'm not a financial advisor. This is not financial advice. So whatever you do with it is your own money and your own responsibility. All I'm saying is, most likely, it looks very toppy to me. It looks very toppy to me. You can just type it in TradingView 3, COT, and it will show up. Right? It's a free indicator or anything. Everything that I'm using actually here is all free. So you can just put it into TradingView and it will show up. So yeah. So I'm looking for a short position. I know it's not a popular thing to say, but I'm a trader. I want to make money, and that's how I make money. If the price goes down, I'm not against it. If the price goes up, I'm not against it either. Do I believe in Bitcoin or the technology? Yes, I do. I do believe that I'm a fan. I'm a fan of cryptocurrency. I do think that it has a major, it's going to probably be a major part of our life in the future. Do I think it's now? No, I don't think so. Because why? Because people who are in power right now, they have too much power and too much control over people, and people are not the smartest. Not the smartest. You have smart people, but you also have a lot of not so smart people. So yeah, that's just how it is, right? So one more thing before I wanted to show you, to leave you off, is the following: some on-chain, and I just wanted to show you this. Inflow into an exchange is usually not very good, as you know, and 4,338 bitcoins has been flowing in on the 27th of May. 3,000 bitcoins have been flowing in on the 28th of May. So for the past 2 days, did the price react on the past 2 days? No, price actually on the past 2 days, 27 and 28, actually went up, meaning they have not sold yet. Why haven't they sold yet, do you think? Why do you think they haven't sold that 7,000 or 8,000 bitcoins? Because Wow, are they waiting for the expiration date of the the CME chart? Most likely, yeah. Does that make sense to you guys? I hope that makes sense to you guys. Well, that makes sense to me at least. So I'll leave you off with that, and I hope you enjoyed this one. And yeah, you were not able to find the Metcalf indicator. Guys, can't you just type it in? I don't know why you cannot just type it in. Okay, this is the Metcalfs, right? You just type in the indicator. Okay, I'll remove it. See, this is gone. Then you put it in, then you do search, and you type in Metcalfs. As you can see here, ta-da! You click on it, and it will show up. I don't know what's so hard about it. I don't know what's so hard about it. Put some effort into it, guys. Put some effort into it, okay? Anyways, what I wanted to say is, go back to here. Okay, let's wrap it up. Let's wrap it up. It's looking toppy, guys. It's looking toppy. It's looking it's looking bearish. Too much retail buying Bitcoin. Sadly enough, that's not a positive sign. Institutions selling. Professional traders. Am I a professional trader? Yes, I am a professional. I'm one of those guys. I'm one of those assholes that are selling. So, yeah. It doesn't look good. Could I be wrong? Of course I can be wrong. Can the hype continue? Can the people, the retail people prove me wrong? Yes. Let's push it up all the way to 11,500. That would be cool, right? Oh yeah, what does the HVP? Let's go over. Sorry, I didn't go over that. It's already 1 hour, and I just I went through so much stuff. Let's go to expected moves chart first. Expected moves, the first standard deviation to the top side is 9,498. 9.5k. Does that is that range familiar? Is that range familiar? I think that range is familiar. The bottom side of the first standard deviation is 9,194, 9.2k. Does that break anything? Doesn't break really anything, right? Doesn't break anything. Our Stokes still curling up, still positive. HVP. What is HVP saying on the 12 hour? Still expanding. And the RSI, let's see it. RSI is still up above the EMA. Will be crossing down below 9,110. So that's something that you can now put into your mind. If it crosses below 9,100, most likely will be going back towards that 8.8, 8.6k area once again. So we have a more defined range right there. Let's go on to a daily. That's the chart itself. Daily. Okay, daily Stokes are still going down. That's actually bad. Let's see the HVP. Well, I've already put the line there. We're still contracting. Like I said, most likely tomorrow. Here. Which is the expiration date. Which is the expiration date of the CME. Whoa. What a coincidence. What is that? What is that coincidence? Is that a coincidence? It has to be a coincidence. RSI is still crossing above the EMA. For the daily, it's 9,275. So if we cross below the 9,275, yeah, overall things are still looking bullish, as you can see. That's the reason why I still think that that we most likely going to be going up a little bit higher, right? So short recap. What are we looking at? We are looking at a possible move above here. I do think that we might be able to go a little bit higher as well towards 9.6k, but we have a beautiful doji candle here like I said, doji candle. So our risk is very defined. If we break above this doji candle, most likely we'll have a chance to be going up towards 9.8k or something like that. So that would be a nice stop loss or a nice reversal into a long position, which is still possible, right? But either way, I'm not really interested in a long position right now. I'll be building up my short position. Like I said, and like I explained before, there is resistance, major resistance. We got declined twice already on this double top formation. So I am not that bullish. We can see that retail has been purchasing and pushing the price up. We can see professional traders and institutions starting to sell off, etc., etc., etc. We are seeing 7,000, 8,000 bitcoins getting moved into the Bitcoin exchanges. It's most likely not to be longing, right? And then yeah, that's it. But yeah, risk defined. We have a risk defined. If we do break that doji candle, most likely towards 9.8k, that is towards the upside, and that's where my risk is defined. But like I said, I am looking forward to build a general big short position, not a long position. Where do I expect us to be going down? Most likely either way. If we get rejected on this area here, most likely here 8.6k or the green box here. But since that we have already touched that green box 3 times, most likely the 4th time or the 5th time it will be breaking down, and then I'm seeing the price around here at the EMA at the lower 8k line, which is also the simple moving 200 average, which is around there at the 8k line as well. So yeah, that's basically it. That's where I am putting my position, but this can also happen, of course. We can have another bounce there. So if you want to be safe, you can take, well, I'm going to take some profits here and reanalyze things, but like I said, we already have three touches, 4th time could be the lucky one, but yeah, I guess that that I went through all the situations or all the probabilities or where I am putting my master plan up, right? So yeah, all good. Did I go over everything? I think I go over everything. Whew. So yeah, let's make some money, guys. Let's make some money. So yeah, let's make some money. Please like, share, follow, share, like, comment, whatever you want to do with this channel and videos. And I hope to spend some time once again tomorrow. Same time, same place, and yeah, 7:30 p.m. UTC +8, and of course I hope to talk to you again tomorrow. And as always, please